Shadow of Truth with your host Dave Cransler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. And today is Thursday, June the 18th, 2015. And we have a special guest on the line today, Mr. Steve St. Angelo from SRSRocco Report. How are you doing today, Steve?
Doing great, Rory. I'm looking forward to chatting with you and Dave. I think there's a lot of interesting information we can talk about.
I would agree wholeheartedly. Dave, how you doing?
I'm doing well, thanks. I agree with you, Steve. Let's see what we can dig up.
Now, in the markets, it's unbelievable. Don't you agree?
Yeah, I mean, I wrote an article about that, I think it was last week, where I said, the volatility's starting to ramp up here, and to me, it's a sign that the Fed may be losing a little bit of control on their grip over the markets.
Yeah, I think you're right. It's in this Greek situation, especially now that if the folks in charge of the government, if they don't basically exit the euro, they're going to be lynched by their own people. I think that's I see that happening.
I would agree, because that's why they were elected.
That's exactly why they were elected. I mean, I'd imagine the situation's more complex, and to me, it also seems as if they do exit the euro, I think pensioners are not going to be able to get their money. So it's going to hurt the people anyhow, but I think at least they won't have to pay back all these debts. And if Russia comes in and helps them out, and which they're supposed to, I think the situation after a year or so would be like Iceland, or at least a lot better for the Greek people.
Let me ask you this question. Why do you think that the Greek pensioners won't get their money if they exit the euro?
The situation in Greece is the same with the United States. Pension plans are underfunded. Now, I don't know the details of the Greek situation, but I think if they exit the euro, I think they're using some of the money that they get to pay. It's like the U.S. is propping up the same thing with the pension plans and with the 401ks. They're propping up the system. And if the dollar collapses, or if Greece exits the euro, I think what would happen, we would see an initial disintegration, and I think they would not be able. They won't have the money to pay the pensioners or the amount they're paying them now. That's how I see it, but I might be wrong. But
why wouldn't they just print drachmas to pay them?
They could do that. Actually, they could. You know what? They could do that. But that wouldn't solve the situation. But yeah, I guess they could continue to pay them by printing drachmas.
The thing of it is, it's the only reason I can think of that Greece hasn't just said, "Guys, we're leaving," is that they know that their only alternative if they convert to drachmas is hyperinflation. Now they can default on the euro-denominated debt that they owe. That's fine, but they still have to print a lot of drachmas to service their own internal needs.
Yeah, and I think that is the problem. There's really no good solution. But at least if they exit the euro, they can kind of start clean, and at least they're doing what the people want them to do. Doing this austerity and trying to pay back debt that they can't pay back is ridiculous. So,
since when do governments ever do what the people want them to do?
Never, not any. That's true. That is true. Nothing changes.
But I want to comment on something you just said as far as their debt. They don't owe that debt. Siripos came out yesterday or the day before and said, this is illegal, it's illegitimate, and it's odious. We're not paying it. Forget it.
Yeah, I did see that.
You ain't getting it.
Yeah, I did see that.
I don't know exactly the technical details of the laws, Rory, but I think in this country, if you're in a situation where you accept a loan and then you go and spend the money, you basically have validated that loan.
Well, that's true. That's probably true. Who knows the situation over there? Do you remember what was his name? He wrote the book
You're talking about the Diary of an Economic Hitman.
Right.
Yeah,
now,
John
I think
Perkins.
what he's saying is true, that the people didn't take those loans.
Right.
It was the corrupt dictators.
That's correct.
And so, actually, the people shouldn't be responsible for those loans. It should be the dictators. And I don't know what kind of government that Greece had when they first came into the European Union, but I'd imagine it was headed by the same kind of folks that were in line to basically keep the status quo. So who knows? But I think they're going to give a middle finger. I really do. I think we're finally going to see that. I mean, look at $2 billion they've withdrawn. The Greek people have withdrawn in the last 3 days from the banks. So I think this weekend is going to be interesting.
Yes,
I really do. And the next 3-4 months, heading into September, October, oh my gosh, are going to be really interesting. The situation in Europe and in the United States and globally, mostly in Europe and the Western countries, what we've done is we've continued to paper over and leverage the system. And so now when there's this thing called Senecas Cliff, and it was by Lucius Seneca. He was a Roman philosopher during the Roman Empire. And he said, the way to growth is slow and sluggish, but the way to ruin is rapid. And so I don't see, when we finally get to the situation in Greece unfolding and what it does to the banking system, the financial system with Deutsche Bank, I think when the system finally starts to unravel, the speed at which it will unravel and how it takes down the physical economy, I think will be breathtaking. It's been propped up so much by leverage, and when that reverse leverage comes in, it will be unbelievable, I think.
Breathtaking. That's the ideal description, because it's not just going to affect Greece and the Eurozone. It's going to be global. When things start to unravel, whether it's Greece, whether it's Spain, whether it's the Federal Reserve, whether it's the AIIB, whatever it is that triggers it, it is going to be stunning because of like you pointed out, Steve, the volume of leverage, along with the sheer volume of phony currency that has infiltrated every single inch of this global economy and financial system. I mean, it's ridiculous.
Yeah, and one more thing. I was listening to a great interview by Jeff Rubin, and he tends to focus on the energy markets. And I really didn't know this, but as the price of oil went up from $25 in 2002 to $110 by 2011, it was more than four times increase. It brought on this expensive oil, like oil sands and shale oil. Well, I didn't know how that changed the whole Canadian economy. And he went on to say, Jeff Rubin said that a lot of this oil sands came on the market, and then what it did is it made the Canadian dollar strong, because its value, the Canadian dollar, was based upon the oil, this huge increase in oil production from Canada. And so what it did is it decimated their manufacturing over the past several years, because their goods became more expensive. So he says that their manufacturing has declined significantly compared to what it used to be 6-7 years ago. Well, now that the price of oil is in half, it has decimated the oil sands projects in Alberta. And they were estimating that they would double production, I'm not quite sure, 2030 to 5 million barrels a day. But they are gutting all these projects now. And so now they're caught in a catch-22. The price of oil has collapsed. Projects are being cut off. And now the revenue that they were receiving, the GDP that they were receiving from their oil production and exports, I believe in March they had a $7 billion trade deficit. I'm not if it was 7 or 70, but it was the biggest deficit that Canada's had in March ever. So it just goes to show you how things can change so quickly in a highly leveraged system. And unfortunately, they started selling and extracting this very expensive oil, and it works at high oil prices, but the whole system is not really sustainable when the prices fall in half. And so it's going to be a tough deal going forward for Canada.
Yes, and speaking of oil dropping, that was one of the main emphasis in your latest article, the top primary silver miners Q1 2015 results, in which you point out that the primary silver miners enjoyed much lower energy cost, but they still managed to lose money. And if you would, Steve, let's kind of look at that for a minute. And their production cost says that it was down, according to your chart here, was down $53 million in the first quarter, and their adjusted income was $18 million to the positive, and the estimated silver income was $9.4 million positive, but their realized silver price per ounce dropped by $1.98 down to $16.87. So how does that add up?
Yeah, it's interesting. The total revenue stayed about the same. I think, and I go by, I do quarterly statistics, quarter one through quarter three. For some reason, some of the mining companies don't really break down their quarter four numbers. They do full year. And so I compared this last quarter one, 2015 to the third quarter, 2014. And that's when the price of oil, I think, went from 103 down to like 53. It fell almost in half. And so finally, the energy costs, the lower energy costs, as well as material costs, finally filtered through the mining industry. Now, what's interesting, the total revenue only increased a few million, but their byproduct revenue increased $5 million. And this is what's fascinating. If I go back to, let's see, when they were making money, and this was in quarter three, 2012. In that quarter, the 12 top primary silver miners, they received $30.33 an ounce. I mean, what is that? That's almost, not quite double, but it's about $14 more an ounce they received just a few years ago. Well, their revenue was $924 million, and they only sold 22 million ounces. Now, the reason why is Tahoe wasn't a mine yet, and Tahoe produces about 20 million ounces a year, so they would be about 5 million a quarter. So they made $924 million in revenue just selling 22 million ounces of silver, and their byproduct revenue and gold sales were only 28% back then. Now, their byproduct and gold sales are 419 million. Of the 855 million this last quarter, it's almost half. So it's like the silver revenue has fallen significantly. They've added a few primary gold mines, and that's helped that revenue. But it's like their base metal mining has actually held up better than the silver price over these past several years. So even though the miners still were able to get lower costs, according to my data, they lost another 29 cents an ounce as a group. And I did state in the article, 4 of them did make money, and 8 of them lost money. But so even with the lower energy cost, Rory, the miners are still struggling.
When are they going to start disappearing?
Well, I know Andy Hoffman, he wrote a recent article, I think DEFCON, and I have a little different idea about the mining industry than Andy does, even though I agree it's tough. I actually see the primary silver miners as the bright spot in the future when we have this kind of crash in the system and the gold and silver revalue, which is coming, I see the primary miners as one of the few bright spots to own in the future. Right now, they're struggling. Now, we have seen over the years a few mines close down, but I went back and looked at Coeur d'Alene, and back when the price of silver was like $4.50, $5 for several years, Coeur d'Alene was losing money every year. They lost money in '99, they lost money in 2000, they lost money for like 5 years in a row. But you know what they did? They had shares. They increased their shares. I mean, tenfold, I think it was. At one time, they had 500 million shares.
Jeez.
And then they did a reverse split, I think, in 2008. But I don't see, maybe out of the top 12, maybe one company might shut down. But most of them are they may be losing money, but but I think at least they're not struggling where they're losing so much money. So I continue to see them at this current production, at this current price. I see them holding for a while. Now, if the price of silver continue to fall, which I doubt it will, but if it continues to fall, then we could see some more mines come off. But if it stays here and starts going back up, I don't see any mines shutting down.
You know, just to add sort of a positive side to that outlook, the thing of it is, like, your article focuses on the large cap primary silver miners. And to their credit, most of them have done a great job cutting their expenses to the bone. I mean, I talk to managements of these companies all the time. The industry has pared back expenses to the bare bones. And then they've had, the recent boost in margins because of lower energy costs. Energy is 50% of the cost of mining. So there's two real big positives here. If and to the extent that we start to get a move higher in the price of silver, most of that price increase is going to drop to their bottom line. And the second thing is the unintended consequence of this incredible amount of gold and silver price manipulation that's been done by the West, and specifically the Fed and the U.S. Treasury, the plunge protection team, is that new exploration is basically at zero, other than from junior mining companies who have cash to do exploration. And not only that, but most of the existing mines have been high graded, meaning that the low-hanging fruit has been already mined by these large primary miners in an effort to try and fatten up their margins a bit. So what's left in a lot of these large mines that either directly produce silver or produce silver as a byproduct of primary metal mining is that it's mostly lower grade ore that's left in the ground. So in other words, what we're going to see is we're going to get a price increase that's going to be boomeranged by the fact that there's going to be lower production output going forward. And that, to me, that's going to be the catalyst that propels these miners to very quickly to new all-time highs when silver and gold eventually become untracked from their manipulation.
Yeah, and I think I agree. I agree with that because, and I've said this several times, I think the peak in silver production will occur in the base metal mining industry first. And what makes sense, and right now we're still in peak oil production, even though we've brought on this conventional, but unconventional, expensive unconventional. We've been in about a 10, 11-year plateau where it's been bumping around. Even though we brought on some more of this expensive unconventional, that's not sustainable. But the conventional has been bumping around about 73, 74 million barrels for the last 11 years. And I think what they've done a lot of, they call it enhanced oil recovery. Basically, they stole future production to bring it on to today. So when we start seeing a decline in global oil production, it will impact GDP. You can't have growing GDP unless you have growing oil production. And so if oil production is falling, so will GDP. And then if GDP falls, then you're not going to need copper as much. You won't need zinc and lead. You won't need these different base metals. So there'll be less supply coming from the base metal, less byproduct silver coming from the base metal mining industry. However, I do agree that once silver and gold revalue after we have this next economic financial collapse, we will see actual stronger primary silver production and falling base metal. And we all know that base metal is about 70% and gold of silver production globally. So there will be a pinch. I believe peak metal production, whether it's silver, gold, base metals, will occur soon after peak oil. But I think primary silver production could actually grow. But overall, silver production will fall. And that will be a pinch, especially when people are trying to get access to silver. I mean, look what's happening to India, how much silver they're trying to acquire. So it's going to be really tough for people who wake up to be able to access silver in the future.
Speaking of India, Dave, you wrote an article just a couple of days ago as well. As back on the 15th, I believe, and it was Silver Price Suppression Intensifies as India Imports a Record Amount. And Steve, I wanted to ask you about this as far as we're talking about lower production amounts and we're talking about lower, peak oil, peak metal production. Right now, what I'm concerned with is today. And what I want to know is, with everything that Dave and I have spoken recently with Jeff Brown out of Beijing, and I believe that you listened to that interview where we were discussing the silver ore imports in relation to China's solar program. India has the same program where we haven't gotten the numbers on their imports of silver ore at this point, but we're working on it. What I want to know is, where is the silver coming from at this point? Because what we've found out is that China is using every speck, basically, of silver that they mine in China goes directly to their solar program. If China has any, or not China, but if India is doing any silver mining, more than likely it's going to that similar program, because they have equally as large an outlook or project as China does to bring solar power online for their country. With that said, that means that any silver that China imports, or any silver bullion that China manufactures into pandas, into other manufacturing for the technologies industry, which we all know that they do massive amounts of that. Where is all this silver coming from currently, and where is it going to come from in the future?
That's a good question. I'm looking at a chart done by ETF Securities, and we'll take it for, it's a mainstream analysis, so we'll take it for what it's worth. But according to their figures, China is importing about 100 million ounces. That's about 3,000 metric tons. That's what they're importing. And that's what they're on track to import this year, about 3,000 metric tons. Now, India, on the other hand, is importing 3 times that. It's over 300 million ounces, which is close to 9,000 metric tons. The United States has been importing about 5,000 metric tons on average. This year, it seems to be higher for whatever reason, and I think someone's acquiring a lot of silver bullion. So right now, we're on track to import 6,000 metric tons. So you add 6 and 9, you get 15, and you add China is 8. That's 18,000 metric tons. And then if you subtract out those countries' production, it brings down total production of about 22,000 metric tons. So there's 4,000, 5,000 left over for the rest of the world. Where is it coming from? Well, you see, that's a good question, because I have a new silver chart report coming out, and I show the last chart in the report, the annual deficits that we have experienced over the past year. It's 930 million ounces.
Jeez.
Where did that come from? So I think where this silver has come from above ground stocks that have been depleted. And we have to remember China, India, and Russia used to be large. They used to supply a large amount of silver into the market from their government sales. Well, that all stopped last year. And I think in 2007 or 8, it was a high of 70 million ounces. So that's all gone too. So we're seeing I think what's happening in the market, there's a continuing tightness, even though it's not apparent right now in wholesale and retail demand. But what is interesting, and I want to get to this, I think I remember Dave saying that a lot of the silver that India might be imported could be for industrial, and that might be especially this year. But India is a very interesting situation. The United States imports most of the silver for fabrication, most of it. So that 5,000, a large percentage goes to industrial. However, I've got a chart, again, in this new report coming out that shows U.S. and Indian silver imports. When you look at U.S., it's kind of flat. It kind of goes up and down. But when you look at India, it looks like a heartbeat. It goes up and down significantly over the past 7 years. Well, that's because of their silver bar demand. Indians actually demand the most silver bar bullion in the world. And in 2012, after we had that big spike up in silver in 2011, their silver imports plummeted because of their silver bullion imports plummeted. I think it was like 9.6 million ounces. That's all India imported officially for silver bullion. Well, that year, their imports were only 2,100 metric tons. Well, 2013 came around, the price of silver got smashed. They imported 60 million ounces of bullion that year. Well, their imports increased to 6,100 metric tons. And then last year, 2014, they increased it to 63 million ounces of silver bar demand. And so imports were 7,000, a little more than 7,000. So what we can see is as their demand for silver bullion increases, so does their imports. As the demand for bullion decreases, so does their imports. And I also would say Indians also invest in silver in jewelry. So a percentage of that, those imports are for jewelry too. And so I think with the price of silver being so cheap in 2014, and I think they are ramping up industry. But I think it's a lot of bullion. There are record bullion imports now into India in the first 4 months, as well as jewelry demand has picked up significantly. So when you have those three things, bullion, jewelry demand, and industrial demand, I mean, India is the largest consumer and importer of silver in the world. So to answer your question, it's going to be interesting. I don't think the powers that be can push the price of silver down much further because it would spark more imports, more demand, even Western demand for silver eagles, which are really picking up now in June. So I think we are going to see some very interesting fireworks in the silver market by the third quarter of this year. I would say September, October, we can see some serious shortages. If the situation continues to get worse in the financial industry, and as people start buying more silver. So I think we could see a big spark and a blow up by the third quarter.
What's interesting about what you just said, Steve, about something happening in September, October timeframe, is that, and I've mentioned it before on our Shadow of Truth show, but there's a very, very good source over in London. Historically, when he's dropped some information onto the person who gave it to me, he's probably been about 80 to 90% accurate. And mostly it's been in sort of directional calls in terms of which way silver's going to go. But he told my contact last week that there's a lot of chatter about there being a shortage of silver at refineries by October. And I know it's a good source. It doesn't mean it's right, but I know it's a good source because John Embry actually alluded to the same source in a King World News interview, and I know Embry well enough to know that he wouldn't have made that a public comment unless he felt pretty confident that the source is bona fide. You know, certainly the information may or may not play out the way the source has suggested it, but it's a good source.
Well, you know, I think the information, the common sense is it makes sense because we have seen such a significant drawdown in above ground stocks over the past 2 decades, especially the past 10 years. And there is very little silver available. And even though we're not seeing shortages right now, it's kind of the same thing with the U.S. Treasury market and the stock market, seemingly hovering around 18,000. It's like Bear Stearns. 1 minute the stock was $92, and the next minute it was $2. So there's this realization that I think when folks realize how big of a Ponzi scheme that the treasuries and conventional assets and all these things tied to a highly leveraged debt-based fiat monetary system, once you start seeing people getting into silver, and I think they are, I think we're starting to see bigger buying now into silver, because we wouldn't be importing. The United States would not be importing this much silver, because the fundamentals for the market don't really require additional silver. We're not seeing it in the silver investment in Silver Eagles. We're not seeing it in industrial demand. So somebody, some large entity or some large buyers are actually, I think, purchasing silver. So I do think it makes sense that by the end of this year, or let's say September, October, I think it's a perfect scenario for things to get out of hand. And as I've said before in my last interview with Rory, I think the reason people don't realize how expensive things are going to be in the future, commodities and goods and services, because in the last 15, 20 years, money has been funneled out of physical things and into paper, digits, and assets. And it's one thing for you and I or Dave, we take our extra money, we put it into silver coins or gold coins, and then we've got it in a safe somewhere. That's stored economic energy. It's there. So we took our funds, we took our extra wealth, we put it in actual gold and silver coins, and those can be traded. Unfortunately, 99% of U.S. citizens and folks around the world took that extra surplus money and put it in digits. They think they're going to get that back. And that's the reason why gold and silver are so undervalued. It has nothing to do with, let's just say, the fiat dollar, which it does, but it has to do with its excellent store of value. And the market hasn't realized that yet. But I think people are getting the picture. And I think the wealthy people are getting the picture first. They always do. And so, and of course, the folks who are like listening to us and following our work, they understand it. But I do see something really happening by the end of this year. So if people don't buy silver now, I really don't think they're going to be able to find it in the future. It's going to be that hard to acquire.
That's some kind of outlook right there. I mean, both of you guys, making a case for something, just within the next 90 to 120 days. That's not even the blink of an eye. It's right around the corner, quite literally. I just hope that people either have what they want that are listening to this program, or that are new to this program. If you are new, heed the warning. If you're familiar with what we're doing here, with the work that Dave does and that Steve does and that I do, then you should be either where you want to be or wrapping things up, because I tend to agree with everything that both of you guys just said. Dave, we need to get the doc on and find out what's going on with the retail market and to confirm everything that you guys have just said, that, see what kind of buyers are coming into the market, see what the current, stackers, what they're doing, find out what's going on just in general. And I think that would make put a nice bow tie on this conversation right here. And
I'm sorry to interrupt you, Roy.
No,
you're
fine.
Absolutely right. I have one more chart in my upcoming report that it really signifies how out of whack everything is. In 2014, India imported 228 million ounces of silver. Their mine supply was 8.4 million. 8.4 million. The United States imported 160 million ounces, and their mine supply was like 37. So if we look at these two countries, both of them together, and this is last year when imports were less, they imported 338 million, and their mine supply together was 46. It was a little more than 10%. What the wild card or the curveball that people don't realize, most of this silver comes from Mexico and Peru. China, of course, is number 3 right now, but they're close to Peru. Let's just take them out of the equation because, as you say, they tend to hold on to all their silver. Mexico and Peru and most of the South American countries, Central and South American, produced most of the silver in the world, and they export it all. Very few of the Mexican people or the South American, Central American people have any need to acquire silver. Well, things get crazy in the financial markets, and we start seeing problems with the U.S. dollar. Eventually, they're going to happen. Why wouldn't, and Hugo Salinas Price is talking about having a peso, a libertad, that would be a silver coin that would change in value every day. And so people could go into a gas station in Mexico and take their silver, and it would be usable as a currency with the peso. So can you imagine? I mean, all this demand that's coming from India is coming from India because all these South American countries and Mexico are exporting it for pennies on the dollar. When the thing changes, when the situation changes, the global economic financial system changes, you're not going to have that supply to be able to import from these other countries. They're going to view this more as of money or store value. So again, I really think for fundamental reasons, I'm not trying to toot silver because I'm a silver analyst, but I think the fundamental reasons for silver are much better than gold for many reasons. So I think it'll be hard to acquire silver in the future because the people the countries that are mining it, you may see them holding on to a lot more of their own production.
And I wouldn't blame them one bit. I mean, I would be more like China. I'd be like, sorry, we have plans for that. We're not sending any of it out into the open market ever again. And they haven't. So, Dave, you got anything else?
No, I think this has been an awesome conversation. Thanks for your time, Steve. We really appreciate it. And I know I can speak for myself. I don't know about Rory, but we'd love to have you back again sometime soon.
Yeah, and I enjoy listening to interviews that you all do. It's you can always learn something. I enjoy interviews. To me, listening to a 30-minute, a 60-minute interview, I learn so much more. But I think people are different. They rather read a 2-3 page article than listen to interviews. But yeah, I look forward to it. I think we're going to have some interesting things happening over the summer and into the fall, and it'd be great to chat about them.
Sounds good to me. We'll definitely have you back on, and hopefully not too long, just in the next few weeks or so. We've been speaking with Steve St. Angelo from the SRSRocco report.com. And Steve, I know you've got you've mentioned a couple times a new report that you've got coming up, and I know you've got a new service that you're going to be offering. So if you wouldn't mind just telling people a little bit about that.
Oh, sure. Yeah, I'm coming out with some very modestly priced paid reports, and this first one is going to be the Silver Chart report. It's got 48 charts in it. Some of them are from old charts over my 6-7 years of writing, all updated, and I've got a lot of new ones. And there's some fascinating things, charts in there to show what's happening in the silver market. And so I will be having that should be coming out in the next week. So I think people would get a very good background. Half of my viewers now are new eyeballs, Roy, and I imagine the same with you and Dave. Half of the people that come to my site are unique people, so they've never seen any of this information before. So you and I and Dave can talk about it, and the folks who've been listening to us, they kind of understand it, they find out new things, but there are new people who are just disenfranchised with what they're getting on the mainstream media. And so we need to kind of bring them up to speed. So this report is good for new folks in the precious metal industry as well as the experienced folks.
That sounds great. Looking forward to it. Just look for that coming out, like Steve was saying, in the next week or so. Next week, I'm going to stretch it out and say 10 days. Give yourself a little breathing room there, Steve. So
okay, thanks, Rory.
And I certainly appreciate all your time, or we certainly appreciate all your time, and we'll get you back on again real soon.
Okay, it's great talking with you and Dave.
All right.
Great talking to you, Steve. Thanks.
Take care.